presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Ben in San Jose. Ben, what's going on, brother?
Hey, Tom, how you doing, man?
I'm doing great, man. Yourself?
I just wanted to thank you and your team and everything. I've been using your technique with the 10-minute charts, watching the VIX, and just making a fortune here on the futures.
Isn't it interesting? That's awesome, man.
It's wonderful. Thanks, Tom. I appreciate it.
Okay, man. Have a great one. Have a safe one.
Now, Tom O'Brien.
What's going on, everybody? This is Jacob Shoup. You're watching the Tom O'Brien Show. I hope you all have had a fantastic day. We're going to have Tim Ord on today as well. I'm very much looking forward to that. I'm looking at some of my notifications here. Seems like Foot Locker. What is the deal with that, man? Look at that. 85% to the upside. Makes a strategic. Interesting. Not really sure what that's about. We'll take a look at that over the break. I just saw that number pop up. Seems like NetEase is up today. Digital Bridge, Regenicell. Again, this has been, this is one of those. If you're a biotech guy, ooh, man, you look for these kind of things, right? I mean, you're talking from $20, $25 up to $550. Quite the movement up in Regenicell. How about that? You've seen a lot of short squeezes, actually, recently. Newegg is a really good example of this. Was it, you're 5.88% right now, but I mean, you're going from 332 all the way up to an 890 there. Same with this. This one's actually short squeeze trying to pop off right now. It's Finger Motion. Pretty not great company in any capacity, but you can see kind of, I found some of the forums that these guys talk about these things on, and I'm not someone who wants to play these at all, but I just find it interesting to see the drama unfold in those things. Take a look at the SPY, trading up 0.33% at 589.48. The composite off about 0.33% at 19,082 cents there. You get the Qs essentially flat right now. The AIQ also off 0.68% right there. Dow Jones Industrial trading up 0.57%. Those Russell futures trading up 0.42%. I mean, guys, this is not horrible price action at all things considered. You have the dollar coming off 0.07%, trading at 189. Take a look at Bitcoin. You're off 0.4%, but you've had some nice movement from the lows of today in Bitcoin. Crude oil coming back down off 2.17% at 61.78. Taking a look at gold contract, getting a bid yet again on gold. Okay, looking at 3,227. Again, another very long wick on gold, and you're trading at 3,124. A lot of interesting signals going on price action-wise in this market. Taking a look at copper futures trading up 0.75% at $4.68 with the silver futures trading up 0.54%. Take a look at your 10-year, trading at 4.45 on the yield. That's after a recent high of essentially 4.5. Take a look at the 30-year as well. That did crest 5% on the yield, trading 4.91% right now. Of course, PPI was a little bit cooler than anticipated, actually almost deflationary. It looks like essentially you have some guys just absorbing, some of the tariffs into the margins, and whether or not that's because they believe it's, transitional or whatever it might be, but that is positive to some certain extent, right? Of course, now we're discussing issues with supply shock. One of the things you can look at as well, and if this is just kind of a one-time, it's not, you have to now at some certain point probably increase costs to get those margins up. If your business already has thin kind of margins, there is a potential that they're absorbing it into their margins in order to not, deplete demand essentially. We'll see what happens. Again, this is what I was saying last month. There's a lot of discussion on what's going to happen with the tariffs, how it'll affect the market. And the only thing I really have to say to it is that we are going to find out. And this is some of the first bit of real data we have that kind of suggests what's going on with that. So it'll be interesting to see kind of what goes forward. There's been a lot of discussion online and big kind of pundits, I guess, as well, talking about these yields are too high, right? And the bond market is indicating X, Y, and Z. Okay, I actually don't necessarily think this bodes super negatively. Okay, I think probably what's happening is I don't see rate cuts coming anytime soon. I think that the labor market is still strong. We've saw with GDP that people are still willing to purchase and can purchase quite a bit. You do have some credit card delinquencies going up, which of course is a problem, but you get a large, large swath that's actually a small portion of the population is able to kind of spend out and keep this thing floating. Again, this is what we saw in 2022, right? I think this is kind of just repricing a little bit with the treasuries, because you look at things again, and I brought this up multiple times, but you look at things like the, junk corporates. This is risk on. This is people buying risk right now. If we were seeing some massive pump ups in the market and maybe something not similar in things like high yield bonds, then I would say, okay, this is a little bit spooky. Additionally, you have the USD Japanese yen going back the way you want it. There's liquidity in this market. Of course, you're going to have some kind of digestive period like you're having right now. The composite's on 0.33%, whatever. I mean, look at this thing, right? So now I'm not necessarily champing at the bit right now to get into a bunch of equities. Of course, we do have some equity holdings and some, leveraged positions and things like Bitcoin, but this is not necessarily indicating that you're just seeing retail pump it. I think initially that's what this is. That is what this was. Of course, you had a lot of the fund managers and even hedge fund guys on the opposite side. That's a lot of what these reports are saying. And it makes sense with some of the things that were leading to the upside. But as it stands, the demand for things like AI and data centers, etc., seems to still be there. Of course, you have CoreWeave increasing capital expenditure, and they defend it by saying, hey, we're just trying to meet the demands of our clients, okay? So that's not a bad scene at all. You are going to increase, the deficit here. And I think that's kind of really what's going on with your treasuries here. And I don't blame people holding it, because, that's just how it's going to react, right? When you're just going to increase the debt even more. But what that kind of says is, hey, at least for the near term, we're going to continue to spend. There's going to be a lot of spending going on. And again, this is very different than what was kind of at least being spoken about early on in the administration, right? And now, of course, the ability to quickly switch and actually start paying off the debt and not adding to the deficit, probably couldn't have been done in such a short amount of time. But this is a change, right? And the idea is like, hey, there's going to be more liquidity coming into this market. It seems like the demand is there. These big companies have plenty of cash to keep themselves floating, survive through COVID, etc. So why not just get back in? That's what I think the philosophy that's dominating here. Stay right there, folks. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. We're going to get over to our guest, Tim Ord, in a moment here. I just want to take a look. One last thing with United Healthcare Group. We'll talk some more about this. This is a big wick here, okay? Might be making a bottoming pattern, trading at 248 at the low, trading right now at 271.86. Quite movement up for the day. Of course, this stock has been completely annihilated for a lot of different reasons, which we can talk about, but you're going to have to stay tuned for that. You got the gold contract trading up 1.25%, the SPY trading up 0.36%. Let's move over now to the Oracle.com. Of course, we have Tim Ord on every Tuesday and Thursday. It is fantastic to have him on, and it has been quite educational, really, over the past few months here with everything going on. Strongly recommend checking out his website. That is oracle-oracle.com. Additionally, you can go over to TFNN.com, click over on the Services tab right there, and take a look at the secret science of market tops and 6 secret ratios every trader should know. Tim, how are you doing?
Good. Glad to be on again. Can you see my charts?
So he says we have the charts up. He is about to post them in the den, and then I will be able to see it. But I believe we have them up and running right now.
Oh, good. All right. This is kind of interesting. Kind of changed my tune here a little bit, but the first chart is the New York declining issues over total. Actually, the top window in chart number 1 here is the NYSE McClellan oscillator, and we showed this last week. This is kind of a repeat, but this is where we are right now. We basically hit minus 300 and went to plus 200. And that's a bull situation, just a sign of strength off of the bottom. That's one sign of strength. Then the bottom one is the 5-day average of the advanced decline, and it must go from 0.7 to 3 in 21 days. And we had that also triggered, kind of a different method. Then chart 2 here is WAG breast thrust indicator, and it also triggered. It's a NYSE advanced gauges over total issues. You take a 10-day average, has to go from 0.4 to 0.6 within 10 days, and it did that. So anyhow, you got a lot. My point is, you got a lot of internal strength off that low we had back in April. So I was kind of looking for a consolidation because we had a bunch of gaps and all this other stuff. Well, here's what's searching around, trying to find out. I was looking for a pullback to find panic in the ticks and trend to trigger the next signal. A lot of the previous, over the years, it kind of changes gradually. But over the recent past, I guess over the last year or so, a reading of 1.2 on the trend or higher shows panic, and that's bullish. And a tick reading below minus 300 or lower is bullish, and that combination usually leads the bottom within 2 days. Well, it's changed over the last this go around. If you look back at this, getting kind of used to this drawing stuff. Let me put this might be a little better, but anyhow, this going back to this would be not the April 7th low, but the low of April 21st.
Yeah.
And there, if you notice, the trend came in 1.24 with 181 downtick readings. That signaled the bottom, and it signals a low within 2 days, and it did. Second day was a low. And back here on first part of May, we have something similar to that. We have a minus 210 downtick reading on this day right here. Then on this day right here, we have a 1.32, which signaled a bullish situation. So this is the new rules, at least how this rally is going. Today, last time I checked the trend, we're at 1.73. We don't know what this hasn't closed yet, but it's actually holding this vicinity. So most likely we're closed in that vicinity. And the only thing we need now is a trend close or a tick close around minus 200 or less. And that's what I'm saying, what's different. I didn't kind of ignored those last two trades because they never got down to minus 200. So if you get 150 downtick readings, I think that's close enough. The market wants to go up. I thought we might feel the gap. We may not. The market's just kind of leaving everybody behind. Yeah. So I think in general, this market's going to keep going because the trend and tick are keep giving bullish signs, not the ideal ones I like to see, but either way, they're pushing this market higher.
Yeah.
So, you got to go with the flow. You got to, pick your spot, I guess. So anyhow, will I get one on the close today? We'll have to wait and see, but maybe the trend will probably trigger today. The ticks, both those signals, you got to have a trend and tick close within 1 day of each other. So you could have a trend close today of 1.7 and a tick of minus 200 tomorrow. That would qualify for a buy. Or you could have a minus 200 tick yesterday and a trend today of 1.2. That still qualifies. So I think we may get it here. But what's a little bit disturbing, this is kind of I posted last time. The top window is the VIX, and the next which is this window up here, and the next window down is the SPX VIX ratio. And this here is the SP, I think it's the SPX. But anyhow, it's kind of extended. You get the VIX or the SPX VIX ratio up against the Bollinger Band. Normally there's a consolidation.
Right.
So we may, at worst, we may not fill the gap. We actually may just pull sideways here, kind of go sideways before we go higher again. So I think the market's not going to let you in. That's what it's starting to look like.
Kind of hear you, yeah.
Yeah, that's what it's kind of doing. So, but if you get enough panic in the ticks and trend, and so far we got the trend today, so it's not going to pull back much. I thought we might pull back down to this gap we had here actually Monday's gap is right there. And we may not even do that, so I don't know. But the internals are actually strong. So it's kind of a news-driven situation. Trump's been out there doing a lot, and evidently the market's starting to respond to it. So we'll see how that goes, but I could be getting long here before maybe today, maybe tomorrow. It depends what the ticks do over the next, a couple of days. Seasonality is actually over the 6 best trading weeks of the year. Seasonality wise is from May 24th to June 5th, which starts next Friday. So there's no sign of a top of any consequence other than possibly you may fill the gap, which is around 5,700. Bar that, I think we're just going to just kind of creep up, and today be the 4th day up. We're up again tomorrow at 5 days in a row. That predicts market will be higher within 5 days, 83% of the time. So there's a lot of kind of momentum on this market. If you notice, it's not really zooming up. these zoom up markets kind of kill the rally. This is kind of just creeping up, and these creep up markets usually kind of keep going.
Yeah.
So, and everybody's afraid of those creepy markets. Those are the best because they get on. I've been in them before, and they just keep creeping up. If you look back in this period back here, the market just very small trading ranges, but it just kind of crept up. If you notice right here, it kind of zoomed up. That's when you get in trouble. So I hear the music.
Yeah, no, I mean, this has just been such an amazing past couple weeks trading. Tim, please stay right there, folks. We'll be right back with Tim Ord after the break.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the 2nd and 4th Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. We are joined right now by Tim Ord of the Ord Oracle. You can check out his website at ord-oracle.com. Look at his newsletter. Check out his book. You can contact him. Tim, before we went to the break, taking a look at the SPY, and yeah, I mean, it is, as you said, like kind of like a creeping rally, right? And that doesn't take a bunch of wind and energy out of everything, and it can kind of continue to the upside. You know, I'm seeing some stuff as well. You know, one of the things I've been looking at is like the high yield corporate bonds, which is, you know, those don't get bought, those aren't memed, right? So you don't have a bunch of retail traders buying those things, right? It tends to be more, you know, institutions or funds, and I mean, that is showing risk on too, you know?
Yeah, it's you gotta, you know, you really can't have opinions on the market. I try to be opinionless, and if the only thing I worry about is trying to find where the panic is, and then I have rules by the panic. You know, trend readings 1.2 higher. You know, tick readings less than -300. Now it's around 200. So the rules change a little bit, and you got to change with them. So, but as long as that. You know, especially today, 1.73 on the trend, you know, there's no worthwhile pullback forming here other than maybe test that gap, and I don't think we'll even get there. We'll have to wait and see. I think the public's getting left alone here. Last time I got out was, I think it was May 9th, up around that, what was it, 55, I don't know, 550, so I kind of missed part of this rally, but it wants to go higher. So these trend readings don't show up only at lows. So they don't show up at tops. So, you know, thing wants to go higher. So we'll see how the next today trades and tomorrow trades. But I may be long here for, I don't know. It depends what the trend does today. So we'll see what happens. But we can go with the gold market.
Absolutely. Let's take a look at that right now.
Yeah, it's just probably, you know, down into June. It's going to take its time, evidently going down. But we talked about this 3 drives to the top pattern. It's kind of a repeat. But where's my signal thing here? Yeah, this is the first top right here. This is the second top right here. And this is the third top. 3 drives to a top pattern. You got to have off the second top. You got to have an increase in volume, which you can see really did. So that was kind of a show of weakness right there. Then rallied to new highs. And it's kind of hard to pick out exactly where that high is going to be. We thought around 50, and we got out close to that. I think we're up to 52.5 or something, some up in that range. Right now, we started the pullback. If you notice, yesterday. We were running into the lower Bollinger Band, and after we closed below it, a lot of times you'll get support, and market may try to fill the gap. The gap most likely would be resistance, because to get through that gap, you got to have volume of this magnitude, which is about 40 million shares. And I don't think we're going to get 40 million shares into that gap. So once we probably get the gap, it's going to be resistance, and we're probably going to resume down. Time-wise, you know, it's probably going to be June and July. I don't know how fast its decline goes. I guess you could draw up, you know, parallel lines, figure out close to it, but it might be around the July 4th time frame. A lot of times that July 4th time frame for the gold market, if it's going up, it's a lot of times a high. If you're going down, it could be a low. But anyhow, that 39 area is going to be good support. And I'll have some other indicators probably help pick out that low. But right now, the bottom window is the 18-day average. Let me get another. Yeah, it's the 18-day average of the advance. You know, it's up-down volume. Anything below -10 is bearish. We're at -15. And next one is a GDX advanced decline with an 18-day average. It's anything below -10. We're at -16 is bearish. So we're in a downtrend. As long as those two indicators stay below -10, that's where those lines are. The downtrend's in force, so it may try to bounce a couple of times, but in general, we're in a weak position on GDX. So, but it's in an uptrend. It's not like, you know, there's no bottom right here right now.
Right.
A lot of times these two bottom indicators get down to around -20 area. To really start signaling exhaustion to the downside, and that may be one clue. We're not real close to it, but we're getting closer, I guess you might say. But it seems like -20, if you notice, whoops. go back here. If you notice here, this last low, both those two indicators got below minus 20, and that was pretty much the low. So that may happen here and be something I'll be watching for. So anyhow, right now, trend's down. You have a question?
No. I was just, I was looking at the miners kind of while you were going through this, right? Because we're talking about these small penny stocks. I mean, some of these guys are continuing to pop, even today with this down. I mean, we're looking at VGZ's up 2.92. Your Goro, I mean, this is an interesting guy, but I mean, that's up 21% today. I'm not sure what to make of that equity at all, but I mean. Yeah,
that's on a monthly chart, something big's going on with that.
Yeah.
I kind of loaded up on it. This thing is, it's acting kind of weird. I've seen these charts before, like coming off these major lows like this. So something is going on in a big way. So I added to that position here. So this is still in the early stages. The Bollinger we're above the mid Bollinger Band on the monthlies, and the upper Bollinger Band haven't even turned up yet. It's going to start pressing against that upper Bollinger Band and bend that thing up. So I think if anything has a chance to be a $10 stock, this one could be it. So no promises, but it's doing a lot of good things that I've seen charts with the volume coming in over the last several months. That's smart money buying in a big way. And so this is an early stage of a major rally. So I hate to give high price or targets to this thing because I really don't know, but it's still in the early stages. Even though it's gone up here quite a bit, I still think on a bigger time frame, it's still a buy.
But, I will say, like, a lot of, like, looking at this chart, a lot of the movement to the upside, besides the gap that preceded in November 5th, I mean, the volume has been, on updrafts in it, right? It's an interesting equity, for sure. But,
Yeah, there's some other ones starting to pop too. All these little ones are going to start popping all over the place. So I still think we're in early stages here. So, we're running out of time already.
Oh, no. Stay to the next one because we have some questions as well, if you're okay with that.
Yep.
Okay.
Yep. I got a couple more charts anyhow.
Fantastic. That works. Well, there's the music. Tim, please stay right there. Folks, we'll be right back with Tim Ward after the break.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everybody. This is Jacob Shoup. We got a special thing going on today. We have Tim Ord on for yet another segment. Got some charts taking a look at, and then some questions as well. You go visit him at ord-oracle.com. Tim, we were looking at the GDX before we went to the break.
Yeah, we're looking at this chart. This is another reason why I sold that position. This is a monthly chart. You get above 80% above the upper Bollinger Band, which these times you did. And that's the reason why I picked around 50. That was about 80% above. It's since backed off. But that's the reason I picked that spot. So I kind of eyeballed it and I think, well, we're pretty close. So anyhow, and it got support around 40, which is pretty close to 39. So, you had to bust out above that trend line. That trend line goes back to 2020. So it's a long trend line. So it's going to be a strong support area. So RSI on the monthly's got up around 50 or around 70. That's another reason why. Here's a bigger trend. This is the one that going back to 2014. This is the chart that got you out pretty close to some significant highs. And what it is, it's the GDX-GLD ratio. And anything below 0.14 is a buy. We had the last buy, looks like about January of this year. The previous one looks like about, I don't know, February, March of last year. One before that was late 2022, probably October, November or something. Then this is a COVID crash. That was in 2020. That was a March low.
Right.
There's one in, anyhow, they all get around 1.14. This one back in 2016 stayed below 0.14, the ratio, for, looks like about 6 months, and it's built a base and it rocketed up. And this one is, so anyhow, 0.14 is basically a good area to buy. Shows that gold stocks are cheap compared to gold. And you get up around 1.2, according to history, going back to 2016, anything above 0.2 is getting expensive. And that's the reason why I put those blue things there, blue lines, they kind of pick out the top. So we're right between that. We're 0.156. So if we get up around 0.2, that's one reason to look for an exit. I'll have some other indicators, but right now on the bigger time frames, we're not even near a valuation type thing that we're even close to some sort of a high.
Right.
And how long will it take to get there? Months, if not years. So, matter of fact, we haven't got above 0.2 since 2022. So even though the market is pretty much 22 to, it's pretty much doubled since 2023, round off numbers, we're over, we hit a 25 to 50s double, and this ratio still way below 0.2, so we're still safe to buy, I guess you might say,
right,
on the bigger time frame. So once it gets there at 0.2, I'll be showing that chart, and I'll have some other charts too to see what's going on. So, but bigger time frame looks fine. Short-term time frame, in a nutshell, we're probably pulling back to the 39.40 area in that vicinity. So that's my spiel. So yeah, questions?
Yes, we do. And I just want to say, I mean, it really does seem like that for, both of the kind of indices we're looking at today with the SPY and the GDX, I mean, with some of this kind of recovery, I speak more with the SPY right now, but with some of the recovery we've seen after these kind of tariff announcements, I mean, even, with somewhat high tariffs, I mean, this is a market that wants higher price, that has the money to put it in, and it's really fascinating. I mean, even some of your riskiest things have been getting bids to the upside, which is really fascinating. So, for questions, we did have one in the den. I'm going to read this out. It says, we get to a Q&A. Oh, go ahead.
Actually, before this, because I think Trump is a big on the equity market and most likely any market, and he's going to keep it. He actually said he's going to keep the coal, or he's going to pump it up pretty much. He says he wants to have the best market they ever had in the world. So I'm thinking he's probably going to produce that, along with it, a lot of inflation. So it's going to be a win-win, but trouble when he's out of office, which is 3.5 years from now. Whoever's going to take that over, it could be
stressful,
problematic. I'll put it that way.
Yeah, absolutely.
So, but that's a long ways from right now. So we'll enjoy the ride while it's good. So.
I know. I mean, that's kind of how you have to look at it, I guess, right? But I mean, seriously, the way that this has pivoted has been fascinating. But you are right. I mean, everything he's doing really does seem to be. I kind of visualize it as I think he has some kind of really. Maybe he holds like the Gilded Age kind of in a close way to him. A lot of the ways he like designs his stuff, how he talks, some of the industries he's interested in is very reminiscent of like Vanderbilt era kind of stuff. So I could totally see him, obviously, pumping it, and he said it as you said.
So which is good for the economy and everything right now. So get what we can while the time's good. So that's how I look at it. But he's stock market friendly. I'll put it that way.
Absolutely. Yeah. So for some of the questions we have one. This is the context of it, and this is what the viewer is saying. I know Tim only looks at the closing tick. There's some interesting similarities in today's seemingly panic-looking trend indicator in the throes of, quote, topping signals all over the place in the current market action. Today's 1.81 trend can fix the short-term numbers fast. Today's trend opened at 1519. It's kind of what he was just asking. I'm not sure if you're. I think we kind of went over this, right? Like you're not seeing necessarily a topping signal right now.
No.
Yeah.
No. I mean, I was actually kind of looking for a pullback and hoping the trend and ticks would find the next low, but the market doesn't even want to pull back, and so now you got it with the market up. You got a bullish trend reading. That says to me that probably the pullback's not, of any consequence, it's not going to happen. You may get one in July. That may be what's going on here. We rally into July 4th timeframe. A lot of times, seasonality-wise, July 4th is either a high or a low. And so maybe we rocket into July then and get some sort of a pullback. And I was kind of looking at all these gaps ups we had, and normally you get those gaps filled. This market's not doing that. So you got to. You don't tell what the market. You can't tell what the market to do, but the market can tell you what to do.
Totally,
and that's what I'm trying to read. And the panic, even though is not extreme, is good enough to push the market higher. So I'm going with it. So if I get a signal, even though the market's not pulling back, I'm going to take it. And I bet 9 out of 10 times that's usually a winning trade. But I was trying to figure out, why this market wasn't pulling back, and I went back and studied the ticks and trend, and they're good enough to put rallies in. So I'm going to go with the current readings. So I'm taking the trend of 1.2 on the close, and instead of a minus 300 tick, I'm taking a minus 200 tick. So if that develops, I'm along the market. So it is what it is. As far as the open goes on the trend, I don't think that's a real good reading. You got to wait until the whole accumulation of today's highs and lows, ups and down volume, that to signal the best trades is take the trend on the close.
Interesting times, Tim. Tim, thank you so much for coming on. We'll see you Tuesday, all right?
All right.
Take care.
Talk to you next week. Thanks a lot.
Folks, stay right there. We'll be right back for a short segment.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. We got a short segment left here. We'll be going, we'll go over more of everything I wanted to talk about today on Friday, tomorrow. Weird week. Taking a look at SPY at 0.31%. Let's just talk about some other stuff, and not the indices. Okay, PPI was okay. All right, Corey spending more money. Walmart's okay, maybe increasing some of its prices with it. Taking a look at UNH. So this has been pretty wild, right? And based on some dividend models that I ran with the information we have historically, this is underpriced, okay? At this level, I think, okay, the suspension of forward guidance is gnarly in a lot of ways. It does seem, at least, that the free cash flow is okay, because really what you're doing is you want and in theory, I think a lot of this gets purchased, obviously, because of the dividends, right? I mean, this is like, your dividend growth has continued. The problems that exist, and this is beyond, missing the earnings, bad forward guidance, CEO stepping down, and now allegedly some kind of federal investigation into them for Medicare fraud. That's an issue. Of course, you get less government spending going on, okay, with things, like Medicare. This is a really interesting thing United Healthcare spoke about, but but it is the complexity of their customers, meaning that they just require more money, okay, more medical services, right? You're talking about an insurance company, razor thin margins already, okay? So any kind of, analysis on new clients that is wrong and they end up, being sicker, I guess, than anticipated, can really hit companies like this. We're gonna need a longer time to talk about it and kind of what I think, but this is rejecting that low for the day. Take that for what it is. Folks, thank you so much for joining me. We'll see you tomorrow morning, 9 a.m. with Tommy O'Brien for the Morning Market Kickoff. Take care.